Hello, what's up, guys? Welcome back, first of all. Hope you all doing good. It's your boy again, man in the building, or JK, or RK, or any name you call it. So, today is another beautiful day, even though it's actually gonna be a long day because I am moving from this little room and I'm moving to another house, another room. Yeah, it's gonna be a really long day. Anyway, before that, I decided to share with you guys what we can expect from the market this week. So since today is Saturday, we are on the weekend. Instead of just doing nothing, I decided to share with you guys how I did analyze the market and what we're expecting. And it's simple. Before I show you guys practically, I'm gonna tell you theoretically. Theoretically. You get me right? Good. So simply, I am at the 4-hour time frame. And as we all know, whenever you come to the market, the first thing you do, nothing else, the first thing that you do is gonna be going to the higher time frames. That higher time frames is gonna let you know what direction is the market heading. Is it up, making higher highs and higher lows? Or is it down, making lower lows and lower highs? That is the benefit of the higher time frames. Again, we're on the 4-hour time frame and I confirmed that the market is downtrend. What I did was I marked the last low and the last lower high. I said the market could only do two things. Okay, it could be three. That three is consolidation. It's if the market wants to consolidate from from in the middle of certain areas. You know what I mean? In the middle of certain areas. But the other two options that we have is that we now see that the market has touched its lowest point. The market gold, it's been going up, right? And it came from its highest peak ever. It has made it's almost reached 6,000, like 5,000, probably, let's see, 5,000, not actually, 5,400. Yeah, 5,400 was its highest, was, I don't know, wait, 5,600, sorry, 5,600. And then as the market did that, now I've realized that the market has touched its lowest point. Okay, which was the beginning of I'll show you, which was the beginning of this massive uptrend that led to the market went all the way, its highest level ever. So what happened? I marked that level, that lowest level, and I said the market could either be two. It could either continue its downtrend, meaning it's just all we need is to confirm that the market goes below its lowest low. So if the market wants to continue its direction, it has to break the last high or low depending on the direction. So now we're talking about downtrend. So all we're gonna wait in order for us to confirm whether the market wants to continue, we're just gonna mark it's the lowest level that the market has reached, and as soon as that low is broken, we're good to go. Meaning we know that the market wants to continue its downtrend. Or the other thing is if the market wants to get reversed, if the market wants to make shifts from bearish to bullish, we have to wait till a break of a structure happens. And what is break of structure? Simply the market breaks the last lower high. So now we're talking about a bearish market, right? So in order for us to confirm whether the market wants to get reversed, to make a shift, we have to wait till the price breaks its lowest high. Lowest high, of course. The market makes lower low, lower highs, lower low, lower highs, right? So that lower high, if that lower high is broken, we are good to go. Broken, the retracement, an engulfing candle. After that, we can confirm that the market is going uptrend. So that was the two scenarios that we can actually expect from the market. With that being said, let's see. I'm gonna show you guys practically what I'm talking about, so you guys can understand very good. And yeah, maybe we can get back to each other. Maybe I'll tell you something, maybe anything, but just let me show you guys practically of what I'm exactly talking about. Okay, so now as you guys can see, we're on the 4-hour time frame. And what is the market telling us? That the market is making what? Exactly, downtrend, you know, lower lows and lower highs, right? So what I was talking about, that the market has reached its last low, its lowest low is actually this level. Meaning if we now turn this, if we swipe a little bit, we can see that this move was the move that caused the market to move its highest level ever in the entire history. Okay, that was the move. So the market has touched, and it kind of, you know, made me suspicious. You know what I mean? Like I kind of doubt it. I'm like, why in the world does the market touched it? As soon as it touched it, it just went all the way. Then again, it started to make a little higher highs and higher lows, right? Like you can see higher high, and a new higher high is forming, right? A little higher low. Then we can see a higher high happen because the last high was broken. Then again, the market has made a little higher low, and then the market is stood there. But now I'm never gonna trust, because the safest way is actually to either be broken this level, this last low. What did I say? If we want to know exactly what the market wants to do, we just have to mark the last low and the last high. That's it. So this is the last low, as you guys can see, and as soon as the price breaks it, we can confirm that the market wants to continue its downtrend. Or the other scenario that we have is that if the market wants to reverse, we have to make sure that the last lower high is broken. A real broke. I'm not talking about a sweep, okay? A real breakout. An engulfing candle with a huge momentum, you know, or huge volume in it, and then a little retracement. After that, we can go ahead and confirm that the market wants to get reversed. I mean, wants to continue its uptrend. So what about this one? If this scenario doesn't work out, if the market couldn't reach this, okay, no, this is like for sure. But since the market is looking like, you know, something that, I mean, if the market now, it's looking like it's going uptrend, right? It's going up. So the reason I put this thing is because I said this could also be a supply zone, a supply level. All right, this could be a supply level where the market, as soon as the market touched it, or maybe, you know, makes a fake breakout, which we call sweep. The market sweeps this level, and then a lot of retail traders will think that the market broke this level, and then they're gonna, you know, place a buy stop without a real confirmation. And as soon as they do, the market just might went all the way down, and then a little retracement then makes its downtrend. So it could be either of those. In order, I mean, for us, the safest way we can do it is actually to always see a real confirmation. Okay, we don't rush. We don't literally rush. We always look for a real confirmation. Okay, and yeah, actually, I don't have a real account yet, but I am actually willing to get. And as soon as I get it, it's going to be life changing, inshallah. It feels like, you know, when you don't have a trading life, your trading setup, your trading things, I mean, everything looks perfect. But when it comes to real life, you know, when you get the real account and everything, the situation shifts, you know. It's just literally crazy. Anyway, I think that was all for today. I appreciate you guys watching. Let me know what y'all think my setup. Do your own analyzation thing and let me know. Alright guys, if you want to join my Telegram, let me know as well. Peace out.